Hi, I'm Mike Coe, and this is Your Open Interest, where I'm taking your tweets and comments and questions and responding to them if I can. Tweet me at Michael_Coe if you have a comment or question, and I'll try to answer it. So, take a look at this first one. Christopher says, at Melissa Lee, CNBC, at Options Action, Cisco has a double back gap to 47. If I'm in the option, I'm putting this to 48. Okay, so Christopher is responding, I think, to the hit that we did today, looking at Cisco going into earnings. And one of the things that we highlighted was some activity in the May 53 calls. Those were actually the most active calls that expire at the end of this week. It was not the most active option, though. So I think it's important to bear in mind that when we highlight some unusual activity, and it did have unusual activity, Cisco has been averaging about 2 times as many calls as puts over the course of the last 20 days. Today, it actually beat that comfortably. It traded just shy of 49,000 calls versus just under 17,000 puts. So in fact, the call to put ratio was actually almost 3 to 1. However, it's important to keep in mind that a lot of that activity wasn't necessarily bullish activity looking at earnings per se. The biggest trade was a roll of the May 50 calls out to the October 52.5 calls. In other words, somebody who owns the stock, had a big block of the stock, had sold the May 50 calls against that stock, now finds that those calls are in the money because the stock closed very close to $53 at the end of the day today. And of course, with those things expiring at the end of the week, they don't want to be assigned, that is to say, be called out of the stock. So they buy those short calls back and then sell a further out of the money and longer dated call to essentially offset the premium. This is something that you sometimes will find yourself needing to do if you are doing overwrites, if you're doing covered call strategies, and the stock ends up rallying further or faster or both than you anticipated, as it must have in this case, because you would not obviously sell that 50 call against your long stock if you knew or thought that the stock was going to run all the way through it. Okay, so I think it's also important, though, as we take a look at this, to think about some of the other things that are worth consideration as we are looking at earnings. So Cisco, obviously going to be reporting tomorrow after the close, May 19th. The bull case, I think, for Cisco is a pretty good one. The company has been transforming from a hardware company into software. Right now, it represents about 30% of revenues. Their target is 50%. The software business is growing at about 11% growth rate. And they're actually identifying this as a potential $100 billion revenue opportunity. That's quite substantial when you think about it, because the company has about $50 billion in round numbers in revenues right now. I think another part of the bull case is that the pandemic has accelerated some of the investment. Obviously, we also have other secular tailwinds, which include 5G and just obviously the continued migration of enterprise to cloud. They have a very strong balance sheet, 30% free cash flow margins, or just under, which means that the company can comfortably cover their substantial and heavy dividends. Here's the thing, and I'm just going to get rid of my picture so you can read this. At 15.7 times forward earnings, that's certainly cheap to the market right here. It is above the 2-year average multiple for Cisco, though, which is closer to 4.2 times forward earnings. Another thing, obviously, going into earnings here is that they've had to face the well-documented chip shortage, just like everybody else. We've heard a lot about that in the auto industry. This impacts them as well. That can prolong lead times and could hamper a beat. It's one of the reasons why the compound average growth rate that's anticipated for this particular earnings release is closer to 3.3% rather than the 7.9% or so over the past 4 quarters. And another important thing is that their strategy depends pretty heavily on mergers and acquisitions. And, we have 2 potential constraints to this. One is, obviously, after a prolonged bull market, it has stretched valuations. So if you are an acquirer, which is the case for Cisco, the companies that you are looking to potentially acquire as part of your growth strategy are much more expensive. That's a problem. And then, of course, there's always the potential for regulatory headwinds. Now, we just take a look at what's going on in the options market. I think I said this on the air. The implied move is about 4.5%. That's well less than the 6.7% that the company has averaged the week that they've reported earnings over the last 8 reported quarters. As mentioned, calls have outpaced puts by about 2 to 1 on average over the last 20 trading days, but by about 3 to 1 almost today. The 10,000 lot roll of the May 50 to the October 52.5 calls really had a lot to do with that. So looking at the options that expired this week, even though calls were more active than puts, the most active short-dated option was the May 53 puts, actually. About 2,750 or so of those had traded. And then, of course, the May 53 calls came in just behind those, also trading a little over 2,700 contracts. Okay, so, here's the thing. When you look at the options flows, obviously, we're trying to get a sense of what the sentiment is. The street generally does like Cisco. They like their transformation story to software, but the stock has had a considerable run. And options are cheaper going into this earnings than the history of moves over the last 8 quarters would suggest. And that could be why you see, some of the activity that we're seeing. It is possible, by the way, that the May 53 put buyer is not necessarily making a bearish bet outright, but it could be that they own a stock position and are looking to hedge it because the stock has clearly had a pretty considerable move. If you have questions or comments and you would like me to respond to them, I'd be happy to do that. Tweet me at Michael_Co, and I'll try to answer your questions as well.